Hey, welcome back to the Stock Estate Academy, swing trading strategies in 6 minutes or less. And for those of you who are new here as well as my old subscribers, I welcome you and thank you for joining me today. And for those of you who do not know who I am, a quick introduction. I am the Stock Estate. Okay, I am a current swing trader. I am a teacher at heart, and I really like to teach whatever knowledge I learn, as well as not being just a teacher, but a student as well, because I like to learn and learn and learn. Without further ado, right, let's jump straight into the video. Drop a like, subscribe, and let's go. Okay, so today we're gonna talk about breakouts. Okay, breakouts. So what is a breakout, right? So as you can see from this annotation from previous ones, a breakout is a little bit different from a reversal, whereby a reversal is when a stock hits a bottom and then it just bottoms out and it goes up higher. A breakout is whereby it hits a certain form of resistance, then it proceeds to consolidate and have enough energy to break out higher. So it is more of a high go higher kind of situation. So that's the general definition of a breakout. So you have a quick introduction and knowledge about it. So let me just go through some of the few points that I think if you want to play a breakout, what you should know. So the first part, I'm going to talk a little bit more about describing it. So significant declines, right, evolve into long basing periods characterized by failed rallies and retesting of prior lows. And what do I mean by that? Okay, let me just annotate it. So I like to draw out what do I mean here, so that you are able to take a look and visualize what I'm trying to say a little bit more better. So basically, significant declines or whatever, right, goes into a certain area. Okay, then it goes up. Okay, and it hits a somewhat of a support or a resistance, right, where it's kind of characterized by a lot of failed rallies, where it goes up, it breaks up, right. Sometimes you may have a false breakout and it kind of dips back into this so-called resistance area. Okay, and the retesting of the prior lows, right? So it's gonna go over here, retesting of the prior low. The prior low is around here, right? So they'll keep retesting, all right? So it kind of debates into this long period of this is what we call a consolidation, whereby the stock price not really moving much. Okay, just trying to retest the prior lows, the prior resistance levels, and it's not gonna move until there's enough volume and enough people or institutions looking at this company and thinking that, hey, this is a good buy or a good short, and they come in to push the pressure down, and eventually all the stop loss that's been set around these areas here will be triggered, and you'll feel a large move downwards or upwards. Okay, so basically that is what I mean by that as well. So let me just erase all this. Okay, but as new accumulation slowly shakes out the crowd of losers, okay, new accumulation slowly shakes out the last crowd of losers, the bear market character changes, right? The price starts to rally towards the top of a key resistance. Okay, short-term relative strength improves and the chart may print a series of bullish bars with closing tickers near their high. Okay, so what does this mean, right? Okay, so let me just annotate it out again. So for example, okay, previously we talked a little bit more about bottoms, right? So it hits a bottom, okay, it goes up higher. Now it is starting off with a kind of a new trend, trying to hit up higher. It may accumulate, all right, it may hit a top again. So this area, okay, is a supposed resistance, right? So it kind of accumulates around here, then it starts to rally, okay, and short-term relative strength improves. So this one you can go check on short-term relative strength. You can go and check on Investor Business Daily. There's such a thing called relative strength. Please take note that this is different from RSI, which is relative strength index. That is an index that talks a little bit more about being oversold or overbought. But relative strength is about how strong that company or how volatile that company is in relation to the overall market. So if the short-term relative strength kind of improves, and the chart may print a series of bullish bars with closing ticks near their highs. So this is what maybe we are looking at a 1 hour time frame or a 1 day time frame. Okay, so if we zoom into this area, so again we may zoom into the 1 hour time frame, what we can see, right, is, example, this is the resistance. We can see that there's a lot of bars. Okay, a lot of bars, okay, there's green bars, okay, bullish bars, okay, that's closing near the highs, okay, signaling that there's a lot of strong pressure, right, at the high over here. So finally, the issue begins a steady march through the walls marked by previous failures. So once it breaks out, I mean, that's what it's called, right? A breakout, right? So the stock must overcome gravity to enter new uptrends. Okay, so that's when it's in a downtrend, right? That's in a counter trend. That means it's a counter trend trade. That means there's a lot of negative bias against it, right? That means there's a lot of people waiting to sell, take their profits, or sell release the back they're holding. So there's a lot of gravity, okay? So they must overcome this gravity to enter new uptrends, okay? So value players build bases, but can't supply the critical force enough to fuel strong rally. So again, at this area itself, right, where you look at these kind of areas, okay, there's a lot of value players or a lot of, people who have bought in over here, bought in over here, bought in over here. They're thinking that, hey, this is a good area for us to, buy in because this area is a lower price, okay? So we want to dollar cost average, okay? Value players, okay? When we look at these kind of companies, right? Maybe this company has a good cash flow. This company have a pretty good price to sales ratio, and the fundamentalists or the people who are looking at fundamental analysis, right, are thinking that, hey, this is a very, very good company for us to, buy these kind of prices. So in a sense, value players start to build a stable base, but most of the time they'll kind of add in slowly. There's not a lot of the emotions, which is greed, that drives a rally, right? Because most of the rallies are driven by greed because people see the price rallying higher, they panic buy, and they just pour in massive amounts of volume, and institutions starts pouring in to trade this momentum or whatever. Hedge funds starts to trade this kind of momentum, and this greed, right, will explosively manage a rally upwards with their stop losses all being hit by the short side. So, but if it's just value players, right? There's small little retail investors here and there, sign dollar cost average in. It won't kind of supply the critical force needed to fuel this kind of strong rally. But fortunately, right, the momentum crowd arrives just in time to fill this chore. So again, if for example, it's been accumulating for a long time, right, then it kind of breaks out. Okay, it breaks out of this core level. Okay, it breaks out here. Maybe it breaks out. Okay, close strongly above this line, right? Then that's where a lot of momentum players be like, hey, this is a breakout, right? So they start to pour in at this area, okay? And maybe this will fuel a higher high and a strong greed. Okay, a lot of people thinking that, hey, this is a chance for us to make money, right? So they want to wait until the last minute where there's a lesser time cost or opportunity cost. So they come in and, try to build a base over there, and that's where prices start rallying very high. People which missed the first rally, they're like, oh my god, I gotta jump in now, and then they jump in, and it kind of fuels a very strong rally upwards. So as a stock slowly rises above resistance, which I said just now, right, greed rings a loud bell, and these growth players, right, growth players jump on board all at the same time. So everybody starts jumping in, it rallies up higher. Okay, so again, if you want to trade this kind of breakout, right, you want to be the first. Okay, to jump in. Okay, so you gotta recognize, gotta look at all these consolidation areas. Okay, you might want to trade the first breakout, okay, and set a stop loss underneath, right? And take the first candle that breaks out, and you want to jump in immediately. Okay, you have to be fast fingers, right? But you must always look for a consolidation first. That means there's enough energy to fuel that kind of rally. So if there's enough consolidation, you want to take the first breakout, right? And you take the breakout and for the rally up higher. So that's the breakout for you. So now some cautionary advice, right? So the appearance of the sharp breakout gap has tremendous buying power, right? But a swing trader must remain cautious if the move lacks heavy volume. So again, if it's a one person, a little bit of volume, but the price kind of breaks out, right? That means it may be one or two institutions that's actually moving the entire in a sense moving the market per se and breaking it out. So if this one or two institutions kind of sold it, right, for a false breakout, they are able to manipulate the market, especially if it's a small market cap, right? They're able to manipulate it because they can just fuel a kind of breakout, right? Then people jump in, the people who want to trade this, they jump in, and then this guy just sells and just breaks down, so it becomes a false breakout. Okay, so that's not what I want to see. So you want to see heavy volume. That means maybe average volume of the day, they are trading normally 300,000, 400,000 volume. Then maybe today they're trading around 1 million, 2 million, 3 million volume. That means there's heavy volume, a lot of eyes on this company that can push this price up. So the institutions or the big players are not being able to manipulate it too much. They will be actually squeezed by these kind of big players there. So what I want to look for is heavy volume. So burst of enthusiastic buying must draw wide attention that ignites further price expansion, which is what I said, right? So heavy volume, right, they will trap a lot of people there. A lot of eyes and attention will be on the stock. So this kind of will fuel massive rallies that comes out from a breakout. All right. Price may fuel quickly and trap the emotional longs when the significant volume fails to appear. Okay, so this means that the gap, it may gap up. Okay, so again, when it comes up, right, it gaps up all the way here, right? So if people start buying in here, okay, then it kind of goes back down again, right? It's a false breakout, right? Okay, it may trap all your emotional longs that are here when significant volume fails to appear. This is what it means by what I talked to you about. There's not enough volume to support the movement upwards, right? So you might get trapped Okay, you might get trapped in a false breakout if there's not enough volume. So again, if you want to play breakouts, okay, preferably you want to play a company that has high volume coming in compared to its average volume. So that will prevent you from being trapped by this kind of big institutions. So non-gapping, okay, high volume surges, all right, provide a comfortable breakout floor similar to gap. So again, what I want to look for is not a gap. That means what is a gap? A gap, right? You can go Google it as well. A gap is a okay. Let me just Google it so that you can see, right? Google gap. Okay, a gap is something like this, right? So you can just take a look at this. Okay, so it's a gap, it's like this. So for example, it trades around here, next day it just gaps up. So this is a gap where it just jumps in price, right? And it gaps up. So again, this kind of gaps, we do not want to really, take this kind of gap moves because most of the time we want to see a slow expansion and slowly break out of that company. That means there's a lot of accumulated force that's breaking it out. There's a lot of people, small little players and big players buying into it. If it's a huge gap up one shot, right, you might want to wait for it to come down a little bit. All those big players who are trying to trap the emotional longs, they exit out of their positions and wait for a retest. All right, so what I mean by retest, you might want to wait for something like this. All right, so this area, it breaks out, okay, then it retests back the previous support turn resistance. Okay, resistance turn support, I mean. So then you want to take a position there. Okay, but support can be less dependable and force a stock to swing to a new range rather than rise quickly. Okay, so moderate strength breakouts often set up pretty good pullback trades. So moderate strength, that means if the explosion, right, is not as strong, that means if the breakout over here, right, it breaks out, okay, it comes back down again. Okay, it's not a very, very strong breakout. That means it's not a big big green bar, right? So this is what we want, we can actually use it as a pullback. So again, we wait for a pullback to the resistance turn support, and we take a position over there. Okay, the uptrend remains, faces considerable obstacles marked by clean air pockets and congestion from the prior downtrends. So so again, after it breaks out, right, there's a lot of resistance. There's going to be a lot of obstacles ahead because there's a lot of back holders along the way who are trying to dump that company. And I've talked about it in my top 3 swing trade stocks video. So again, if you wish to do that, go check it out. Okay, and just just a quick plug, right? I'm gonna start a new newsletter or a blog, right, that I'm going to dump all my ideas, all my stuff over there. So if you wish to follow me there, okay, you can go check out the link in the description below, and maybe I'm going to post it there. I'm going to send a link or comment that pin that a link over there. So again, look forward to it. Okay, I haven't really written anything yet, but I'm thinking of doing one. Okay, so back to the topic, right? The swing trader, okay, must identify these profitable resistance zones in advance and be ready to act. Okay, look for price to shoot past the Bollinger Band as it strikes a strong ceiling. Okay, this would define the most likely turning point. Then follow the price correction back to the natural support and look for a low risk entry. So again, normally, right, if you are trading on any sort of company, right, it will kind of move in a range. Then when it hits up, okay, it hits a Bollinger Band. Okay, then after that it reverses sharply onto the support. Then after that you can use this as a natural support. Okay, and look for a low risk entry, right? Where you can set a stop loss right below the support level and rally it higher a little bit more. Okay, so this is actually this is what I'm going to talk about for today in part 1 of breakouts. Okay, the part 2 of breakouts, I'll talk a little bit more in the next couple of videos. So today is part 1. I hope you enjoy today's short session and short learning session, and I shall see you again in the next video. Stop, stay out.